Welcome to the Shared Practices podcast. George, how's it going?
Doing good, Richard. I am extremely excited for today's episode. When you brought me on as a co-host, one of the big things that I really felt like this podcast was different than any other is its sequential structure. And last week, we talked to Kira Dent, and one thing that we kind of both left that interview with is, what is insurance credentialing? Because she kind of talked about it, and it kind of seemed ambiguous. Would you agree?
Oh, yeah, absolutely. I was like, oh, crap, that's something I have not put any thought into in this entire season, and we probably should hit that.
And I had the exact same reaction. And so then I reached out and I got Marie Chatterley on. And just because of the structure of the podcast where we're going through things sequentially, I think it allowed us to find this topic of dental insurance credentialing that we would have never discussed it otherwise.
No, absolutely. And like I said in last episode, I just love that you went out and like found this person and interviewed her without even me really like realizing it. You mentioned it once. You're like, oh yeah, I'll go find someone. And then as soon as, I turned around and there was an episode that you'd already recorded. So this turned out way better than I expected it to, because, initially when I think of insurance credentialing, like my eyes kind of glaze over. That's my gut reaction. So what is insurance credentialing and why is it important? And we'll get into it in the episode, but I kind of want to like preface this so people don't like check out prematurely.
I think that's a great idea because insurance tends to be a dry topic. Insurance credentialing is the process of signing up with insurance plans when you buy a practice that is already in network with a lot of insurance plans. And there's a lot that goes into that because all those patients are relying on you being in network.
And I guess the things I like to highlight, like what would go wrong if you didn't do this right. So there was two parts of this that we'll dive into in the episode. Number one was just like the timing of things. So like the handoff. So there's as little time processing insurance and not being able to bill insurance under your own name as possible. So that was kind of number one, was the timing of things. And then number two was turning this around and maximizing the potential for maybe even improving the insurance situation and negotiated rates that this practice has. So that's kind of like my two big takeaways from this.
I would completely agree. I think that second one you said is a big hidden opportunity that we've not talked about enough. You can increase your revenue by doing no more procedures just by negotiating insurance correctly.
Okay, cool. Well, I think the last thing before we dive into the episode, when I first listened to this, I was like, okay, wait, who's Marie Chatterley and is she the one doing the insurance credentialing? So what's her relationship to this whole process?
So Marie Chatterley is a dental transitions consultant. And so she works with a company, dentalinsurancecredentialing.com, and there's a hyphen in there. We'll have the link in the show notes. And she works with somebody, Melissa Lubick, and they actually do the insurance credentialing. The reason why I think it's good that we had a transition consultant on the line with us is because we didn't get caught up in the nitty-gritty of credentialing for insurance. It's a process that you're probably going to outsource anyway. We really talked about how it affects the transition and how to do it appropriately to not have a hang-up.
Okay. Yeah. And, when she went into it a little bit, it's like you're on the phone with the insurance company sometimes for hours, and it's like, oh, I do not want to do this at all. And so it's cool that she's got this resource that she can talk about objectively, and she is seen as a transition consultant, people who've done this well, people who haven't done this well, and like this is the person, her go-to person that she uses. So it's a great resource, a great perspective, and I think she kind of has the strategic perspective on it rather than just the like, here's how you actually do your dental insurance credentialing. So I think this was kind of the perfect, like you said, the perfect guest to have on here about this. Lastly, real quick before we get into it, the audio quality, I think there was just some Skype things going on, and so it was like a little bit clearer in the first half of the interview, and you'll notice when you guys, I think you had to jump to like a phone call. Is that correct?
Yeah, her internet, there was issues with her internet, so I had to call her on her cell, and then we had to finish up the interview that way.
Gotcha. And then at the end, we're going to have a link in the show notes to a PDF that has fees and frequently asked questions, some additional information about the whole process. So that'll be in the show notes, as well as on our website. We now have a resources page. So that should have a link to that as well.
Yep. And then that's from the actual company that does the credentialing, that PDF.
Okay, great. Well, let's get into it with Marie Chatterley from CTC Associates.
I'm excited. I have with me today Marie Chatterley. She is a transition consultant with CTC Associates, servicing kind of the southwest of the United States. And today we're going to talk about insurance credentialing. It's kind of something we were talking about in our last episode. We were talking to a consultant, Kira, and she was talking about this issue of when you enter a practice, signing up with the insurance and getting the new owner signed up with the insurance can be a little bit of a delay. And so Richard and I were thinking to ourselves, this is really something I think we should dive into depth about. And so I contacted Marie, and she was nice enough to hop on this call with me and talk to us about insurance credentialing. So Marie, why don't you go ahead and introduce yourself to our audience?
Yes, thank you. I'm Marie Chatterley with CTC Associates. I've been doing practice transitions for 14 years. I work with my father, Larry Chatterley, and Randon Jensen, who have been doing practice transitions for much longer. My father's been doing it for, I think, 27 years. And we had a lot of problems with insurance credentialing with more of our practices taking PPO plans over the years. And so we partnered with Melissa Lubick, who does all of our insurance credentialing with dental insurance credentialing.
Perfect. And then for our audience, can you kind of describe that process of exactly what is insurance credentialing?
Sure. I mean, insurance credentialing is basically just filling out an application and filling protocols to be in contract with an insurance network. And at the onset, if you are just applying for your dental license and just looking to work as an associate somewhere, most likely where you're going to work, they will do that process for you. But if you're purchasing a practice, it's really up to you to find out which insurance plans the selling doctor takes and to contact them directly to fill out those applications and submit everything accurately so that you can be a contracted insurance provider with that insurance plan.
And that was one of the questions I had about insurance credentialing is it doesn't seem to be an issue when you're an associate, but for some reason when you become an owner, all of a sudden it's this hurdle that you have to kind of jump over. Is it that they're doing it for you, or is it just the process? Because isn't there a delay?
It's a combination of things. When you're an associate, you're stepping into a functioning practice that already has a tax ID number, a corporate MPI number set up. So the billing entity has been in existence, and you're just being added as a provider. So that process isn't quite as detailed as when you're buying a practice, you're setting up a tax ID number, you're setting up your corporate MPI number, and you're having to credential now as this new entity with insurance. So as an associate just stepping in, it's very possible the owner doctor may be billing under their information until they finish your credentialing packet as an associate. But when you're a new owner, it's different. You're billing under your new tax ID number usually from the beginning. And that poses a lot of problems for buyers who are jumping into a PPO practice or a Medicaid practice where technically you're supposed to bill under your new information. But if part of your patients are now being billed as out-of-network or in-network, then you can have some problems with your front office staff explaining this to patients, as well as patients being upset and frustrated, which we don't want during a transition.
So then if that's the case, then there will be a period after you acquire the practice where you're out of network with insurance plans that the former owner was in network with. Is that correct?
Usually, yes, that's correct.
So then how do you guys kind of tackle that?
Well, a couple of ways. We have to coach the front office staff so they know how to dialogue with the patients correctly, as well as look up insurance eligibility and benefits for out-of-network benefits as opposed to in-network to be sure that patients do, in fact, have benefits out-of-network. And if they don't, then it would be better off to reschedule that patient. There are some plans that don't have benefits for out-of-network providers. An alternate, which a lot of buyers do, is they bill underneath the seller's information, which we don't recommend. So we try to do as much of the credentialing process before you acquire the practice, if all possible. That way, most of it's completed by the time you purchase the practice. And you're just waiting on maybe a couple of insurance companies to finalize some of their protocols to complete the credentialing.
So that's actually something that we had heard about in our previous episode, is a billing under the seller's information. In my situation, I'm going to be acquiring a practice about a year from now, coming out of school with the seller staying on. So in that situation, can you talk about if I am able to, or why you don't recommend billing under the seller's information?
Sure. You kind of cut out a little bit, so I'll restate your question just so I make sure I have it correctly. But so I do see occasionally that there are attorneys that may recommend that you bill under the seller's information. What they're actually asking for when they say bill under the seller's information is to bill under the tax ID number, the billing entity, and the corporate MPI number. So there's nothing inherently wrong with that as long as you're listing yourself as the provider on the claim form with insurance. But what I find that a lot of people are really asking for is to bill under the seller as the provider. So nothing, let me explain, I guess, why that would be problematic. So if you put on your claim form that gets submitted to insurance that the seller is the one that rendered treatment when it was really the buyer rendering treatment, I hope you can piece things together as to why this would be problematic. Because then we have, let's say there's a lawsuit with a particular patient and treatment that was rendered, and we have the wrong provider on the claim form. So now we're pulling our seller into this potential lawsuit when in your purchase agreement, you're signing that you are indemnifying one another from each other and claims. So as well as it's incorrect to put one provider's license and name under as the provider when they aren't really the one rendering treatment.
So if you were to fill out the claim form with the seller's tax ID and corporation number, and then you were to use you as the buyer, as the provider, then would that, in your mind, mitigate that risk?
So it does mitigate the risk, but it doesn't achieve what you're wanting it to do, because insurance is credentialed by the provider, not the billing entity. Medicaid's the only exception.
There's no benefit to doing it that way.
There's none. So if we're wanting to do it correctly, it's not going to achieve what you wanted it to achieve in the first place. So then you might as well just bill under your new tax ID number so that way the checks are coming to you anyway, even though you're out of network.
Yeah, that makes a lot of sense. So now we've kind of established that we're not going to use the seller's information because it could potentially throw a big, wrench in the road. So if we're going to use our own information, then what kind of things can we do before the acquisition, and in what order to allow us to be credentialed as fast as possible?
Well, the applications are pretty tedious. So whether you're doing it or you're hiring someone like Dental Insurance Credentialing to do it for you, you should do it as soon as possible. So once you submit a letter of intent and put earnest money down on a practice and you begin your due diligence, I would begin the process right then. You cannot submit your applications, however, until you have permission from the selling doctor to do so. The reason being is insurance companies, they don't honor non-disclosures. They don't care that the staff doesn't know that the transition is happening yet. So for that reason, you have to have the seller's permission, and usually it needs to be after the seller has informed the staff of the transition, or at least the front office person of the transition. And then you can submit your applications to insurance. But
okay.
Go ahead.
How long does that take after you submit the application to the insurance till the time that you get credentialed?
30 to 120 days, depending on the insurance plan and depending on if you've been credentialed previously or not at another location.
And kind of what are you seeing? That's kind of a big range.
Well, then let me be more specific. So if you are working within a specific state and you have been credentialed as an associate in that state where you're buying a practice, then the credentialing process is not as long and can take somewhere between 30 and 60 days. But if you're relocating to another state, so you've been working as an associate in California and you're moving to Florida to practice, you're doing a full recredentialing in Florida. So it's going to take the longer time, which could be 60 to 90 days.
Okay. And then do you need your license in that state in order to fill out the application?
You do. You have to have the license in the state. You have to have a copy of your malpractice.
Okay. So a copy of your malpractice insurance and then your license in that state.
Mm-hmm. Correct. So you want to submit a full packet before you submit anything. Don't submit it partially. It's going to do you no good. It's going to sit on someone's desk and take more time for them to come dig it back up when you finally get the copy of your malpractice or your license. So just wait until you have everything and then submit the full packet completed.
So would it be in our best interest to move out the closing date in order to be credentialed before we walk into the office?
So we don't recommend that you ask your seller to wait 2, 3, 4 months for you to finish your credentialing and hold up the closing. It's likely that in asking that, you may lose the opportunity to buy the practice to another buyer who isn't asking the buyer to wait that long, or asking the seller to wait that long. They will likely, if you do want them to prolong the closing, they may ask you to sign the purchase agreement and put down non-refundable earnest money during that time because you're holding the practice off the market for a prolonged period of time. I would recommend just dealing with the billing after close and dialoguing with the front office so that we make sure the transition happens smoothly with the patients in the meantime, as opposed to holding up a closing. Because a lot of sellers don't want to tell their staff until, pretty close to when things are finalized. So the only way to get around that is for you to finalize it with them before you start the process, which means you're going to have to sign a purchase agreement and perhaps put money down.
Okay. That definitely makes sense. And yeah, I see how the benefits of, having a little bit of an insurance delay isn't worth losing the deal at all. So now we've kind of established that we need to be credentialed with insurance. We are not going to use the seller's information, and we're going to not delay the closing date. So now that period, we're saying it's anywhere between 30 to 120 days. How do we handle it with the front desk? And you're saying that we're out of network. And so how do the patients handle that? And how does the front desk handle that for that period?
If the patient has out-of-network benefits, it's not going to be difficult for you to manage this because you're still going to bill insurance just the same. The claims will come back from insurance. If there's a slight difference between what the patient would have paid being in network or out of network, you can discount that portion during this meantime.
Is that legal?
But, yeah, it definitely is, especially if it's during a transition like this, where your intent is to be in network and contracted. You're just waiting for the process to happen.
Oh, that's very nice. That's a great service to the patients.
But you bring up a question that I just want to clarify because I do get this a lot. So I've often been told that a lot of doctors have concerns about giving discounts because that is insurance fraud or illegal, which is incorrect. So giving a discount is just not in compliance with your insurance contracts. So the minute you sign up with insurance plans, you're agreeing to bill a certain way, and not in doing so would be in compliance with their contracts with them. So that would mean that if an insurance company came and audited your office and they found out that you're giving, cash patients a discount for not having insurance, that they could likely say you're not in compliance with our insurance plan and then take you off of as an insurance carrier, which is unlikely. But I just want to clarify that in and of itself is not insurance fraud. So fraud is billing something inaccurately, but giving a discount, especially when you've agreed to bill a certain way, is just not in compliance with your agreement with insurance.
The only problem that I have with my Form 2 from Formlabs is that now I'm hooked on 3D printing and I can't afford to use surgical guide resin to print another baby Groot. This machine can do everything that I want it to do for me in dentistry, but the material, the accuracy, and the quality is overkill to make toys for your kids and play around. So I've been looking at FDM printers, the old school plastic extrusion printers. It's made me realize how grateful I am that this thing just works, because all of these other printers, you have to build, calibrate, recalibrate, clean, wipe, hope that it doesn't burn your house down. I interviewed Dr. Michael Schurer, who's a prosthodontist who loves his Form 2, and he shared a pretty similar sentiment.
And now when I got my intraoral scanner, I said, okay, I know this thing works. I think I can go ahead and do this 3D printing. So I went out and bought a bunch of 3D printers, and I got to tell you, there was no manual out there. Nobody knew what the heck we were doing. There was no Facebook forums, and you basically had to teach it to yourself. And I got to tell you, I had some really bad experiences at first because it was one of these things that shows up in a box in 342 pieces, and you have to glue this thing together. And at the end of it, I clicked print and nothing happened. 80 hours later of playing with this thing, nothing ever printed. And I'm like, okay. And I just literally put it down below my house, and it's still sitting there. So when I did this Kickstarter thing, and this box shows up, this Formlabs printer, and I open up the box and I put it on my counter, and the instructions are in there, kind of like says, put the plug in here. And I did that. I put the thing into the software and I clicked print. And it was the only printer that something came out that looked like a tooth. And I said to myself, holy Moses, this might be something here.
To see what the Form 2 is capable of, go to formlabs.com/shared practices and request a free sample.
Thank you for that great explanation on insurance fraud. I did not realize that what you were describing before was not insurance fraud. So that's definitely a great service to offer the patients, throughout the transition to help them kind of get accustomed to the new doctor and the new protocols and everything. So I have a question though. When you're credentialing with insurance, is there any way to kind of negotiate fees or change your arrangement of insurance? Maybe the previous doc didn't optimize it. So is there any way that you could kind of do that adjustment during the transition?
You can, and it's more advantageous to do it at the onset if you are going to negotiate fees, to do it during your credentialing process as opposed to waiting. It does sometimes take longer if you negotiate at the onset, which is unfortunate, but that is the better time to do it. There is a misunderstanding that a lot of sellers, if they've negotiated an aggressive fee schedule, that can be assumed by a buyer. There's no way to guarantee that. Even if it's written in your purchase agreement, the seller has no control over whether the insurance is willing to grant you that fee schedule or arrangement that they've set up. And I have had transitions where my seller did have a better fee schedule than my buyer, and there was no way to change that with insurance.
So that was even after you guys tried negotiating the fees, that the seller ended up with the better fees than the buyer?
That has happened occasionally, especially if the buyer is previously been credentialed with a group that did it for them that has multiple locations. And oftentimes the multiple locations, there's a misunderstanding that perhaps having lots of locations means that you're going to have better luck with insurance and negotiating higher fees, when in fact we find it's the opposite. So if you own, let's say, 4 practices and a couple of them are in certain locations that insurance sees the demographics or whatever their internal protocols are for lowering the fee schedule, that lower fee schedule actually gets grandfathered into all of the locations. It's not like you get grandfathered into the highest fee schedule possible. So if you're an associate, staying as an associate maybe one day a week with this other group while you're buying a practice, then it's very possible that you have to maintain that fee schedule that was already a part of this other group until you break ties with the other group and are just a solo practitioner now in buying your practice.
Oh, I did not realize that. I was under that misconception also that more locations meant more leverage, which meant a higher fee.
It does not. And so anytime someone is trying to solicit the idea that we have, this larger group, therefore we're going to have more power to have a better fee schedule, I have not found it to be the case.
Okay.
Especially with specialists. So that's probably a bigger one for a specialty practice. If they're with, a big group and then now they're buying a practice, they may have to take themselves off of these insurance plans and then re-add them to get the higher reimbursement rate.
Oh, okay. So when we're in this process of transitioning into the office and we're trying to renegotiate our fee schedule, do we do that with the same person that's doing the insurance credentialing, or do we have to get a third party in there that will do the fee negotiation?
No, if you're hiring someone like Melissa Lubick at Dental Insurance Credentialing, then she does the entire process together. So she will do the credentialing and the fee negotiations all at once. And then if you need re-credentialing throughout the years, her and her team, they do that as well.
Okay. That's very convenient then. And so, but it will delay the process. So it'd be closer to the 120 days, or would it go past, do you think?
No, it won't go past. It doesn't delay it a ton, but it delays it a tiny bit because their team, they have to send you the information on the fees. You have to approve it and send it back. So in the time that, it may take for you to review the fee schedule, approve it, send it back over, they send it back in. So it can delay anywhere from like maybe 1 or 2 days to a week or more, but some of that's depending on your time and getting back to them.
Okay.
With an answer.
So then I have a question. As I said, I'm going to be going through a transition in about a year, hopefully, and my seller is going to be staying on. So would they have to be re-credentialed under my new employee ID number and everything after I acquire the practice, or can they bill under their old information while the transition is happening?
They can still bill. So you bring up a good point. If the seller is staying at the practice, then they might not care what entity you guys are billing under, because you can do an offsetting 1099 at the end of the year for funds that were supposed to go to one corporation instead of the other, and they might not. And especially if they're staying there working on the patient, there's not the issue of separation of liability like I explained earlier. So you could in fact bill under his entity until you get yours set up in that scenario.
Okay, but that would be only for them as the provider.
Correct. So what you could do is you could add yourself as a provider under his entity, because it might be easier if you've already been credentialed in the state in which you're practicing. It's a lot quicker to be added as a provider under a previous entity than to be re-credentialed with the new entity. But each insurance company is a little bit different. So you'd have to look at the insurance companies that you're contracted with to see if that is the best protocol for them.
And then that would be something to bring up with the dental insurance credentialing consultant or whoever you're using to handle that process.
Yeah. Mm-hmm. Yep, they will go through and look at them to see if that would actually make sense to do that, or maybe the ones that you're taking, it really is not a lengthy process nor troublesome for them to just transfer everything over to the new entity that you're setting up. And then they don't necessarily have to fully re-credential him. They're just adding him as a provider to your new entity. So the paperwork is not as detailed as your initial credentialing process for him.
So then where is the bottleneck really in this process is the process of submitting the application to the insurance companies and waiting for them to get back to us? Or is it kind of the pre-work ahead of time, getting the application ready also delays people who are buying the practice?
So it's both, because insurance is only typically available from 9 to 5 Eastern time, most of them. And so if you're working full-time as an associate, you might have a limited amount of time to stay on hold with an insurance company. And I know just in working with Melissa's group that they sometimes will be on hold from half an hour to 2 hours, depending on the insurance company they're trying to work with. So the initial process can be lengthy if you're working full-time, just in getting it put together. But where we really see the hang-up is once everything's been submitted and the amount of time that you have for follow-up with the insurance company, and then just their delays. So if the insurance company, we've had this, over the last 5-6 years, they've transferred the way they've done their billing system, especially Medicaid in different states, and they can, redo their online credentialing process and protocols, which can, if it typically took 5 weeks to complete, now all of a sudden it's taking 12 weeks, and that might be out of everyone's control. So because insurance is changing quite a bit all the time, they buy each other out, they form one another under different umbrellas and how they work. And so the process itself with each individual insurance company, there are some unknowns. It's possible they will have a transition that, Melissa's group would notify you ahead of time, that they've been informed that the process is going to take a tiny bit longer because of that and what the estimated time is. But the delays can be more so on the insurance side than anything else, which you can't really do anything about that, but continue to follow up and wait for them to complete the process.
So you mentioned something I think might pique the interest of our listeners. If they hire somebody like Melissa's group, are they still going to have to be on hold with insurance companies and doing this process themselves, or is that something that would be completely handled by Melissa?
Oh, yeah, they completely handle all of that. So they just have you fill out one application and submit all the forms, and then they do everything else for you. They do all the follow-up. They do all the everything. So if they needed to be on hold with somebody...
And how early can you fill out that application?
Oh, as early as you needed to. So you just have to let them know when you've received permission from the seller so that they can submit everything.
So then I've received permission from the seller, and then I have my license in that state are the two things I need before I can have them go.
Yeah, but I would probably have them have everything ready to go before then. So when you submit, when you have a letter of intent that is signed off on, I would contact them and start the process.
Okay. And then while I'm doing my due diligence, they're kind of doing their pre-work, and then we'll get started once the purchase agreement and everything's signed.
Correct, yeah.
Okay. And so now I wanted to talk to you about the process of when you're doing the insurance credentialing. Is it very similar to signing up for insurance as if you're doing a startup? Is that kind of the same process, or is it different with an acquisition?
It's a tiny bit different. With an acquisition, you are notifying them that you're assuming a business, as well as you do have to put some of the selling entities' information so that they know that this is an existing practice that you're now acquiring. But and occasionally there are forms that the seller has to fill out as well. A startup, it's just a simpler credentialing process. It's a similar amount of paperwork, but you don't have the extra paperwork that's coming from the seller.
And the reason I'm asking is because with a startup, I received a lecture about insurance credentialing and signing up and optimizing your spread of what you receive. And there are these, for our listeners, there are these third-party plans like Connection Dental and other ones where they kind of have maybe a bunch of insurance companies that they're signed up with. And if you sign up with a third party like that or directly with an insurance company, you'll take the lower of the two fees. So when you're doing your work, are you able to kind of maybe not take one that they were directly contracted with and accept it in a third party where maybe there's a higher fee? Or is that something you're able to do?
Yeah, of course. Yeah, definitely. So you just have to look at the one that the seller is contracted with to be sure that the one that is going to be through the third party contract is going to be comparable enough for the patient coming in that the benefits won't be confusing, or that they'll be frustrated that maybe they don't have as similar benefits that they did with the seller.
And did I explain that well for our listeners? It's obviously something you understand more than I do. Do you want to kind of rephrase that, or did I kind of get the gist?
No, you said that correctly, because there are definitely insurance plans, but if you go through a main parent third party, which kind of is an umbrella of plans, they can sometimes be able to give you a higher fee schedule, but it doesn't always include all of the sub plans. So that's why I'm saying you have to do a little bit more research to make sure that those sub plans, if you have 15% of a patient base that's on a sub-plan that's not going to be covered if you sign up with a third party, then you may want to decide whether it's advantageous or not to add that.
Okay, so you're really just making sure that you kind of capture all of the insurance plans that all the patients are on, and as best as you can in terms of the fee schedules.
Yes, I think so. I think if you're going to drop plans, you should do that strategically after you acquire the practice, and do it after a period of time. So that way, you're not dealing with a bunch of issues at the same time. You're not dealing with new ownership plus risk of attrition with patient base now coming in not knowing if you're contracted or not. I prefer that the buyer is in network with all of the plans that the seller was contracted with, and then if they decide to drop some later, then to do so in a time where you can prep the patients over like a period of 6 months or a year, where you're meeting with them individually and just explaining why you're dropping the plan before you do so.
Okay, so you kind of struck on something that I wanted to transition into your transition consulting anyway. So let's just say you buy a practice and your eventual plan is to maybe drop some insurance. So can you kind of go through kind of what you said, but maybe more in depth about how the buyer would decide what to drop, when to drop, and how to communicate that with patients, and what timeline with the transition?
Sure. So this is the same for either buying a practice or doing a startup. Especially if you're a specialty that is doing a startup and your intent was to add insurance plans, but then to drop them later. So you wanted to add them to build enough of a relationship with a referral base that you gain their trust and relationship, but you eventually want to be a fee-for-service practice. Or if you're a GP that's acquiring a practice, but you know that the area that you're in really can serve with less insurance plans, or even deciding to go fully to fee-for-service. You could do so over time, but you have to be strategic about how you do it. And I recommend that you do it when you can talk to the patients ahead of time, and after you need, usually I would say with a patient base, it's somewhere between 2 to 5 years is when most people feel comfortable starting to drop plans, where they've seen the patient base enough, or they've been working as a specialist with a referral base, where they now can start dropping maybe 1 or 2 of their lower reimbursing plans, and gauging the results of what that attrition was. And then that way you can dialogue with
kind of deciding what to do.
And then that way you can dialogue with patients, because the last thing you want to do is send a letter out from your office saying that we're dropping this plan. Patients don't understand that. They just assume they can't come to your practice now. Even if that letter states clearly what's happening with the insurance contract and that you can still get them at their practice, they just don't understand it that way. But if you're having patients in your office, you can talk to them one-on-one as the doctor and explain what's happening with insurance. And then they get a second conversation when they leave from the front office, reassuring them that they'll still be able to, look up their insurance benefits and eligibility and verify what treatment will be beforehand. That way they've had, enough time to talk with you about this before maybe they get the letter from you announcing that you're dropping that insurance plan. And a lot of insurance companies, when you drop the plan, they send the letter to the patient as well, letting the patient know that you're no longer contracted with such and such PPO plan.
That's interesting. I've almost heard, I don't want to say the opposite technique, but a technique where you would be out of network with the insurance plan and then present insurance in a way that is very similar without really letting the patient know directly that you're out of network. I don't know if you're familiar with people who do that, or if you could comment on that.
I am, but I don't think that's my preferred model for managing patients. Because if you're...
Okay, you think that could definitely hurt the goodwill?
I do, because if you're not disclosing that you're out of network, but then let's say, so in your example, you're saying you just drop all insurance plans, you're now fee for service, but you don't really notify the patients.
Maybe not all, but maybe like you drop one, and then the patient comes in and you present insurances, and this is your portion, this is the insurance portion, and that's just kind of it.
Well, the first problem is that insurance will likely have already sent them a letter.
Oh.
So I don't love having to correct something after the fact. I like preparing patients with enough education and information well ahead of time so that when they do receive that letter from insurance, they've already been educated by me and they know what's happening and they're comfortable with the process. So, but if you're saying that someone just doesn't notify the patients and they just come in as usual and then explain the insurance reimbursement, I could see that their thought is maybe they'll just make an adjustment if the estimated portion is slightly higher. But where you're going to have a problem is with just their typical exams, cleanings, and x-rays that won't be covered at 100% again. And then that is probably the most difficult conversation to have with a patient who's been at this practice for 20 years and hasn't had to pay for cleanings, exams, and x-rays before. And now they owe 10%. And they're thinking, gosh, I don't think my insurance changed. So what did change? And then now they're skeptical of what really happened if I never dialogued with them ahead of time.
Yeah, I'm glad I asked you about that. It was something I had heard a while ago, and I just thought, I've always wondered how that worked. So I'm glad that we kind of talked about that. I did want to talk to you about Delta Premier. I don't know, are you familiar with Delta Premier and how it affects acquisitions?
Yes, definitely. Do you want me to just address it, or do you have a specific question with it?
Yeah, I'll just kind of preface it, and then we can kind of talk about it. So a lot of our listeners may be looking at a practice that is fee-for-service and accepts Delta Premier, or accepts a lot of insurance, including Delta Premier, not Delta PPO. Or maybe they accept both Delta Premier and Delta PPO. So I just kind of want to talk to you about a transitions consultant. How does that affect the buyer after the fact, and how do you adjust the valuation accordingly?
So I think a lot of buyers would hope that a value is adjusted, but typically a value is not changed much because of it. There are a couple of differences. So depending on what state you're buying a practice in, some states have moved now where there's no such thing as Delta Premier. You can be grandfathered in if you were previously Delta Premier, but if you are buying a practice, there's no option to be Delta Premier. So if it's fee-for-service and the seller's taking just the Delta Premier and you're now coming in, your only option is to be Delta PPO or to be out of network. So if you're out of network, it's actually easier if you can have the seller be the one that drops the Premier so that they're managing the patient base now with a different billing protocol. So the fees are somewhat the same, but the check now goes to the patient and you have to collect from the patient up front. So you can see that that's kind of a challenging thing to do, which I don't think a buyer would love to have to manage both that and transition details at the same time. But that's really the only way to do it. If you want to stay a fee-for-service practice, you aren't going to be able to be Delta Premier now. You can be Delta PPO or just out of network with everything. And then the check would go to the patient, even if you check on the insurance claim that you're assigning benefits over, they don't honor it. But some states will still, aren't or have not made that transition yet. So you can still sign up for either Premier or PPO. And that one's not quite as challenging because you just sign up for whichever one the seller has.
It can be hard to get new patients to come in with the expectation they're going to get a comprehensive exam and everything looked at, and you're going to tell them all of their needs. And if this is something that you want to be doing on a routine basis, you need to set up your team in your office to identify these patients and prepare them for that first exam. Dr. Leigh Ann Brady has a course on speareducation.com called Talking to Patients About Comprehensive Evaluation. Take a listen.
So we're going to operate under an assumption that you would like the ability to have people come in and actually have a comprehensive evaluation completed as their first appointment. And now we need to have that conversation with this person who's never been to our office and they're on the other side of a telephone. As a foundation for me, whenever I talk about a comprehensive evaluation, or really anything that I'm talking with a patient about or I'm going to make a recommendation about, I want to have background information about them, about what their needs are from their point of view. Do they have any concerns? Do they have interests or things that they want to get accomplished? I want to be able to use the conversation as a way to address their needs and their desires and have them see that a comprehensive evaluation is the next logical step. It is the tool that'll help get them that information and get them where they're going. So really for me, one of the foundational principles.
To get access to this course and hundreds of others like it, go to speareducation.com and request an extended guest pass by mentioning the Shared Practices podcast. Use the promo code LOW200 to get $200 off your annual membership.
So just quickly for our listeners, I probably forgot I should have done this before. What is the difference between Delta Premier and Delta PPO for any of our listeners that are not familiar with that scenario and what that affects their acquisition?
So Delta Premier is similar to being a fee for service. However, they do have a fee schedule. It's not like it solely goes on your UCR fee, but it is a lot higher than the PPO. So the PPO is a variety of different contracts that you're adjusting down to, and that you're not supposed to bill the patient above that contracted amount. So Premier is the way that a lot of offices have got around being able to bill Delta directly and have the reimbursement come to their practice. But they aren't technically out of network because they're still in network with Delta Premier, but it's not the same agreement as a PPO plan that has the adjustment down.
So it's essentially an insurance plan that you sign up with that does not require you to go by a set fee schedule.
The Premier?
Yes.
It does not. It's a higher fee schedule that they reimburse off of.
And what's the typical fee difference between Delta Premier and Delta PPO?
Well, depending on what state you're in, like the difference between your write-offs.
Yeah.
I mean, it can be like a 5% write-off versus a 20, 30, or 40% write-off, depending on the state that you're in.
Wow. So it's definitely a big hit in revenue if somebody were to buy a practice that is Delta Premier only and then has to go down to Delta PPO.
Yes, but the reason why, to answer your earlier question, that a seller is not inclined to, adjust their price because of this is because they also know that you don't have to take the Premier. You can just be out of network and maintain the same reimbursement that they've maintained.
It's just a more difficult collection process.
It's a new billing protocol.
Okay, so then for practices that are Delta Premier, how do they, so then they drop the Delta Premier, and then at that point they're just telling the patient to collect the full portion up front, and then they'll get a check for the insurance portion?
Yes, so the front office still processes the claim for them. So they still do, all the insurance side for the patient, but the patient is reimbursed directly by insurance. So the patient needs to pay up front. And if you're acquiring a practice where they aren't as good about collecting money up front, then that would need to be addressed in your transition so that you can decide how this is going to be handled after, because you can't have a front office staff that's not going to collect up front when you're out of network.
Absolutely. What states are Delta Premier?
I would actually have to ask Melissa. It has changed this year, so I know a bunch were added to that list. Previously, I believe it was just California and Florida and a couple others back east. So I would have to check with her. I'm not sure. But it sounds like most of the states are headed this direction. It's not if, it's when they will all eventually convert to.
Yeah, because I'm in Arizona, and I'm pretty sure. Is Arizona?
I think Arizona is. I think Arizona is now one that if you're buying a practice that is just Premier, you don't have an option to be Premier. You either can be PPO or out of network.
And then I'm looking at a practice that is both Delta Premier and Delta PPO. And what I was told was that it would be unaffected because nobody actually uses the Premier because they're contracted with the PPO. Is that correct?
That's correct. Mm-hmm. Yep, that's correct.
Okay. So then, do you have any other advice that you might give our listeners who are looking to go into a transition and they're wondering kind of how to handle the insurance or just other things that maybe we haven't discussed?
No, just to make sure that when you're doing your due diligence, that you're looking at things such as your accounts receivable to see the way, funds are being collected, as well as if you're purchasing a practice and you're looking at AR. So if you're going to, because some buyers are trying to decide if they're going to buy AR or not. But if you're buying a practice that has a lot of PPO participation, just keep in mind that most AR is based on the UCR fee and not the adjusted fee. So if you're purchasing AR, you want to make sure the discount is significant or at least comparable to what they are adjusting on insurance that's outstanding. So that way you're not paying an inflated amount for your AR. And
my plan was I talked to my buyers about throwing AR in. So we had discussed the purchase price, and that was just, I would have, that I was comfortable with that purchase price, and I just wanted the accounts receivable. How do you feel about, I'm not paying for it, but I'm getting it. How do you feel about people acquiring accounts receivable, and how do you feel about that in general?
I don't think it matters that way then, because you're not paying for it. So
correct, but for somebody who would be paying for it, do you recommend that or do you not?
If there's a ton of PPO and a lot of adjustments and it's difficult to know what the AR is, then I don't recommend buying it. But not a lot of our sellers throw it in, though. I mean, I guess you could ask for that, but depending on the practice or how desirable the practice is, you may not be able to get that in your negotiations.
So if you're able to do it, it's great. But if not, then you don't necessarily think it's worth buying if they're contracted with a lot of insurance.
No, not unless they have really clean records and really great collection protocols, and you can see that in the reporting with the office. And then that would be fine to do that.
Okay. And do you have anything else you'd like to add to our listeners?
Not that I can think of, unless you have any other specific questions about insurance or the transition process with that.
No, I think this was great. I think this really cleared up a lot of my questions and definitely our listeners' questions about how to handle insurance throughout the transition and how to mitigate the amount of time it takes to be in network and then how to handle being out of network. So I really appreciate you coming on, Marie. I think you just shed a lot of information, and I think this was definitely a jam-packed with content episode.
Okay, great.
Okay, I truly did not expect to get that much valuable information about insurance in general, just from talking about this process of insurance credentialing in an acquisition process.
I'm with you, Richard. And one thing I do a lot of planning before my interviews, just kind of my nature. And one thing I didn't have on my paper was Delta Premier. And I think that might be one of the most valuable things that we got from today's interview in terms of analyzing practices and looking at those types of transitions.
Okay, so re-explain it to me, because my brain just has like a hard time caring as much about, like, because in my mind I'm like, oh, in 4 years when I get out of the Army, like Delta Premier and all this other stuff it's going to change. So I just like can't like care as much about it. So explain it again for me and why it was important what she said.
Well, for me in Arizona, Delta Premier is kind of a big issue because Delta Premier is a special type of insurance. It's not a PPO, but it's like you get patients who are part of Delta Premier in network, and practices that take Delta Premier also tend to be fee for service on all their other, they're out of network everywhere else, and then they take Delta Premier.
So Delta Premier is kind of like this cushy insurance plan.
Yeah, and it, like instead of taking like a 30 to 40% adjustment on your fees, you're taking like 5 to 10%. So it's like a dentist's way to pretty much get their full fee while still being in network. And it's this, but then the problem is they stopped accepting new providers. So anybody who buys a practice that is Delta Premier is no longer able to sign up as a Delta Premier provider. And that's where the issue lies.
So is there anything you can do about it?
So my mom is in that situation right now where she has a practice that is Delta Premier and the rest are out of network.
Mm-hmm.
And so when I was explaining this to her, I kind of told her she has really 3 options, or the buyer has 3 options. The first option is that they'll have to just accept no insurance at that point, and all of those Delta Premier patients will have to pay full fee up front and then get their insurance portion in the mail as a check.
Okay.
And that's what we were talking about in the episode, is that collection policy shift that can rub patients the wrong way if not done properly.
Sure.
And then the other option is the seller in advance can drop Delta Premier and do a favor to the buyer and then have that transition be done under them, so it's not blamed on the buyer.
Huh. So you'd have to have a very on board, not altruistic, but like really interested in the success of the buyer for a seller to do that. I don't feel like that's a regular occurrence that a seller would be willing to take that on.
I'm totally with you. And I think the issue with this whole Delta Premier thing is all 3 options kind of stink.
They all suck in some way.
Yeah. So, there's no really good way to handle this. But I think if I was a seller who accepted Delta Premier, that would be how I would handle it, because I would think that I'd get the most money for my practice if I did that transition first.
Okay. Because it's like they have to discount those Delta Premier patients because they know they can't do that.
Exactly. And so then the third option is that in the valuation process, you take all that Delta Premier revenue and you adjust it to Delta PPO revenue. And then you assume that when you purchase the practice, you're going to sign up with Delta PPO.
Okay. So you just kind of account for it and you just say, oh, okay, we're going to have to collect less from these patients because it's all switching over. And so therefore the practice is only worth this much instead of that much.
Exactly. And the seller, as she was saying in the interview, is not going to be too happy with that idea because in their mind, it's just a collection policy issue.
Right.
Where you can just drop it, get that same fee, and they'll just get the check in the mail. But, patients aren't going to be happy about that.
Huh. So it sucks no matter what. So, okay. So it's just like, how are you going to handle it? Are you going to do it before? Are you going to do it after? Are you going to do it kind of at the valuation?
And, that's a deal by deal basis, really, and how much you want the practice and how much you're willing to deal with that hang up. I just think it's important for people to recognize it.
Okay. No, cool. No, and I feel like I finally understand the implications of it now that you've explained it to me one last time. So the other thing I really liked about this episode was we got a different opinion. So in the last episode, Kira had mentioned that sometimes in the transition, you just kind of bill under the seller's old insurance information. And Marie today said, no, don't do that. For her, that was like a big no-no. So for people who are paranoid that could come back to bite them, then maybe they want to make sure they do that. And I think the solution she provided was to bill as out of network and then discount the difference in fees for patients. Is that correct? Is that what she said?
That is what she said. Yep. And I actually thought that would be illegal, but I guess it's not. That's interesting.
Well, and she also made the distinction that discounting fees for patients is like never illegal. It could be in violation of your contract with that company and they can drop you, but you're not going to jail because you gave certain patients a discount that you said you wouldn't in your insurance contract. So I don't know if that would embolden people to do discounts and things in violation of their insurance contracts, or at least kind of it was important to her that we got rid of that verbiage that it was illegal.
Yeah, and I guess it was my mistake for using that. Maybe it was not illegal per se, but I agree with her point. She made a good point about how to handle that. The other thing I did get from this interview that I wanted to talk about is I always was under the assumption that when you purchased a practice, you inherited the seller's insurance credentialing and who they're signed up with for what fee. And when she was talking to me, it almost seemed like it's more like a startup signing up for insurance where you kind of have the freedom to renegotiate and rearrange things. And I didn't realize that beforehand.
Well, and I think that the insurance companies wouldn't want you to know that. But for you, this was a big deal. Like when you heard this was like, oh, like light bulb. So why is that so important?
Yeah, it was really mind blowing for me because I'm going through this transition, hopefully in a year from now, I'll be doing it. And I always thought I would have to wait a year and then start renegotiating and rearranging my insurance plans. But from this interview, I figured out I can do that right away.
And so you would have this other company with Melissa Lubbock go through and they would be looking at like, can we still maintain coverage of all these plans, but some of the plans count for the other plans and you're doing it as third party, and that gives you like, how does that work? How does this negotiation benefit you?
So when you think about your insurance patients, you think about the practice you're buying and all the plans they accept. And the seller has either directly contracted with all those insurance companies, or they've gone through a third-party insurance company that has like a third-party insurance carrier that has multiple plans. And based on who you go through, you can get better fees for specific plans. So I'm guessing the seller is not optimizing that because most don't. So you can.
It sounds like sorry to interrupt. It sounds like a pain in the butt, like to go through and like figure out, could you cover from this other insurance, this insurance at a higher rate, but still like the patient wouldn't necessarily notice on their end.
Exactly. And the patient won't really notice because no matter what, you're in network. It's just your fee schedule will be different based on, and if there's two fee schedules, like if you're contracted with a third party that accepts a plan and you're also directly contracted with that same plan, you'll get paid the lower of the two fee schedules.
Right. So you can drop one of those, right? Can you drop the one that you're directly contracted with? And that was her point, is you could do that beforehand?
Exactly. That was her point, was that you can rearrange that to still have all of the coverage that you had before, but have as optimal a fee schedule as possible, which will obviously lead to, more revenue and more profit just by rearranging those things on the front end.
And that's awesome. And that's one of these things that hopefully this is a pearl for someone from this podcast, is that if you go into this transition with your eyes wide open on insurance credentialing and use this moment to immediately maximize some of that insurance reimbursement, it could be a potential small bump in revenue.
Yeah, I mean, I don't think it's as small as people realize. I know somebody on Dental Town that did this, and I think they had like more than $50,000 of added revenue just by doing the same amount of procedures, just by renegotiating their insurance and rearranging it.
No way. Okay. So, and maybe that's the high end. We don't want to give people like unreasonable expectations, but there could be, depending on how much insurance and how poorly optimized it is, there could be some good money left on the table. And it is definitely worth paying someone to go through and really fine comb, renegotiate, lay this out so that you're going to be set up for success.
Absolutely. And Richard, I think this episode is a bit dense in information. So I think before we close, if you went through that process again of how to go through it in the acquisition, that would be great for our listeners.
Yeah. Okay. So my big question was first the timing question. So when should you start this process in an acquisition? And the exact thing that she said, as soon as you submit your LOI, you can start the process of filling out the paperwork. And you could probably even start working with dental insurance, credentialing.com with the hyphen in between the dental and the insurance to start looking at maybe even like some of the optimizing stuff. But she said, don't submit it yet. And the reason is that these insurance companies don't care about your non-disclosure agreements, and they will call the dental office and the staff might not know that the practice is being sold. So they can spill the beans for you if you do this prematurely. So you want to have everything lined up and ready to go. And then as soon as the seller has told his team, then you can actually submit it. So that was like the timing piece. And how long it's going to take depends on a lot of things, including if you've been credentialed with this insurance in that state before versus with that insurance in a different state versus never having been credentialed with this insurance at all. It can take 30 to 100 days. So you need to have your license and a copy of your malpractice insurance ready to go. Don't submit a partial packet. Wait until everything's ready to go. Submit it all together. And then you asked a question about the closing date to see like, oh, should we, if we're not going to be credentialed, should we push out the closing? And she was kind of pretty strong on the, no, don't move out the closing date. Let's keep this moving along. Don't slow down the deal. And then if it does so happen that you have a period where you're not covered, like we said earlier, you can bill as out of network. So does that answer the kind of the when and the how piece of this?
Yep. And I think the only thing I would add to that is to get your employee identification number and all your business accounting and everything done ahead of time also, your business accounts and your corporate numbers and all that, so that process can be expedited also. Yeah.
And that's something that I think when we have a lawyer or an accountant on, we need to ask about is kind of legal entity and accounting entities and setting that up and the timeline of that and like why it matters and what to choose. I think that's something we're going to dive into in a future episode. The one last thing that I got from this episode was kind of this idea that you mentioned earlier, that when you're credentialed with an insurance and you work at multiple practices in a group setting, maybe it's like a corporate office, unfortunately, you can get stuck with the lowest insurance rate. And so of those practices, so if there's 5 practices and one practice has a doc that had this lower insurance rate, the insurance company can stick all 5 practices with that rate. So I had someone reaching out to me on Facebook this week, and he's like, man, we got to band together and like put together these groups, and then we can go and negotiate with the insurance and leverage. And I'm like, yeah, there's definitely buying groups, and there's some people that have done that already. But for me, this was kind of like having a small group of practices doesn't necessarily mean better insurance reimbursement rates. Had you ever heard that before?
I've heard it both ways, and I have no idea which one is true.
Yeah.
Depending on who you're talking to and who they're working for and who they're talking to, it could be completely different answers to that question.
Yeah. And maybe there's some secret way to do it to actually have leverage, or maybe, they don't care about you until you're at the 100 or, 50 practices or 100 practices. But for me, that was just a little side note of like that small group of practices doesn't always mean you've got better insurance rates. So that was a ton. Hopefully people were able to stick along with us and get as much as we got out of this episode. I enjoyed it. I learned a ton. Thank you for doing this interview, George.
No problem, Richard. I really enjoyed it, and I learned just as much as you did for sure.
Cool. Hey, we'll talk to you guys next time on the Shared Practices podcast.